Welcome to MarketTamer.com. It is Thursday, July 2nd, and we're looking at a chart of the SSO, which effectively is a representation of the S&P 500, albeit exaggerated. It's the Ultra S&P 500 fund. And what I've done here is drawn what is a pretty typical pattern, a head and shoulders pattern, which has formed, or certainly almost completed forming right now. The first shoulder here, then we have the head here, followed by the second shoulder, and we were keeping a close eye on this to see whether this would come down and would show a head and shoulders pattern or not. It turns out today it's a very negative move in the market, and it does appear as if this will complete, but we'll wait to see to the end of the day to see whether this actually does continue forming and stay bearish. If it does, likelihood is greater than not that we come down, touch this neckline. After that, if we breach that, we go all the way down. So what's this arrow about? Well, for those of you virtual trading, and obviously as with any of these videos, nothing in the video constitutes a recommendation to buy or sell. We encourage you to speak to your financial advisors. But if you're looking to virtual trade a position, take a look at this level here right around the 27 mark. You can pull up a chart of the S&P 500 if you're looking at an equivalent position on the SPX or even the SPY, which might be cheaper. But this level is important because it's a level that on this second rise up could not be broken. And as a result, even if today's move does not come down over the next couple of weeks through to July expiration but comes back up, we might anticipate that some staunch resistance would take place right at this level, which encourages us to look for trades that would take advantage of options expiring right around that level, such as, for example, a bear call spread. And obviously there are some pretty attractive ones out there right now in the market. Why? Because the market is volatile today, so those implied volatilities have spiked. When implied volatilities spike, they don't just spike on the put options, they spike on the call options too. And so some bear call options have pretty attractive premiums at this point in time. There are actually a lot of stocks in this position right now, so there are tons and tons of opportunities. And as we like to say, you know, we often like to sit still and do nothing for long periods of time. An old Jesse Livermore quote is, it's not in the trading that the money is made, but in the sitting. And we've been sitting patiently for a while now, but this is a nice opportunity. So something to certainly look at in virtual accounts, or if you have a financial advisor, certainly worth having a chat about opportunities. With that, we'll wish you a wonderful day, and if we see you in classes on Sunday, please don't hesitate to follow up. We'll wish you a wonderful 4th of July weekend, and we'll be monitoring the forum, so please don't hesitate to ask questions. We look forward to seeing you there. Have a wonderful weekend, folks. Take care.